I think Gerald's ready to send out the liquidity grab trader to enter positions after what's called a V bottom. A V bottom would be here. This is a V bottom. It's categorized as our yellow trigger entry on our other chart, on our Rico chart. You can see it pretty visually by itself. So that's called a V bottom. So what the LG trader will do, there's two options you can use. There's two strategies. One, you can let it take all these different liquidity grabs. What a liquidity grab is, just for review, it's this distortion in price where they're stop hunting the counter trend traders and then they're resuming the trend back to the upside. So in other words, like right now, they could be trying to grab liquidity right now currently as the market's ticking before GDP news at 8:30. It's a red candle. Here's our red candle. If it closes back green, they just grabbed all this liquidity. They're stop hunting right now. They're potentially stop hunting. If they close it back green, they just grabbed all that liquidity. The liquidity grab trader will go long at the close if it closes back green currently right now. So that's what I did this morning. I got a trade at 6:42 this morning. Had a V bottom. The first distortion in price, or the first stop hunt, where the smart money's coming and grabbing the counter trend traders that's trading against trend of the market. There's your first distortion in price. There's your first buy order block that would be coming in the market. And you know it's a buy order block because it closes back green, so there's more demand than supply. So you have a lot of supply here, but demand outweighed supply, close it back green. So we know that would be an order block liquidity grab because we're closing back up green. Now, if it closed back red, it'd be a trend change. But it did not. It closed back green, and we got all these liquidity grabs on the upside. So there's the first V bottom. So what you guys got in the mailbox yesterday, now you have two versions of it. It will only take the first liquidity grab here, the first distortion or stop hunt that occurs, and closes back green. The strategy will go long right after that. That'll be the first push after a V bottom. Then we come in, we get a retracement, red candle or red Renko. It's against overall trend. We don't want to take that one. We want to wait for another V bottom. There's your V bottom that occurs this morning. This happened at 7:41. We got GDP coming out at 8:30. There's 7:41. The first distortion in price, or the first stop hunt, will be right here. And you can see where they're at because it breaks the low of the previous Renko. And then it closes back. It's a red candle, closes back green. The strategy went long. And now we have another V bottom right here, another V bottom that's occurring currently right now. That occurred. But it's still running this long version right here. It's still in this position. So what you want to do, we do have news coming out at 8:30. One way to use this, you can use this as an order management system where you let it come into a V bottom. You can click it on it. It takes a half a second to turn on. Click it under your control center. And it will automatically, since it's a strategy, get you in on the first liquidity grab, and then it'll manage your position with your stop. If you have breaking +1 on or off, depending how you do it, then it'll manage your positions there. The second liquidity grab trader, like you already have, it'll grab all liquidity grabs. Now, so you can use it as an order management system. Now that Gerald has it out to you, I'll be getting the PDF updated for you guys out to you for longer Renko sizes. So those longer Renko sizes, I like to run, or you can even do it around the clock, meaning you don't have to turn it on and off after a V bottom or V top with trend. You can let it run around the clock, and that will be only on the members website. We do not release that to the public. Those Renko sizes are for you guys to utilize with the liquidity grab trader. All right, so that's essentially the difference between the two liquidity grab traders. One will take all these distortion in prices after your targets are hit, and then liquidity grab trader, the version you just got today, you have two versions now, will only take the first liquidity grab after a trend change. Okay. What you don't want to do with this liquidity grab trader, we do not want to hold through news. Some of you guys and gals are turning it right after news posts. That's fine. Typically, I like to educate traders. Wait for about 3 minutes after the news. Some wait for 5 minutes. But like right now, it's 3 minutes before news. You should be turning this off if you're looking for initial position on a liquidity grab after a V bottom. You're too close to news because GDP, non-farm payroll, CPI, PPI. We like to go to forexfactory.com. It's free for you guys to use. Go down to this, looks like a little tornado, this funnel. Click on the red expected impact news against the USD. And this will show you the top red impact numbers that come up. So today we have 830, we have GDP, and tomorrow we have the core PCE. So this will let you know not to turn on liquidity grab trader, just like yesterday, the federal funds rate. It was a beautiful day to short yesterday. I mean, the liquidity grab trader was on fire. We had a lot of different V tops. The market's in a serious downtrend yesterday after 2 p.m. So just go to forexfactory.com, look for the red impacts. You don't want to hold this through the red impact news. We have news coming out at 8:30 here in another minute. So you can see the V bottoms though, where you want to use a liquidity grab trader. Liquidity grab trader, right there's a V bottom, happens in between Momo 1 and liquidity grab 1. Where you want to see it go long, where it will go long is right in between there. It did this morning. It's caught that nice move up to the upside. Here's another V bottom that happened at 431, another V bottom at 321. So another V bottom into news right now just happened at 8:15 this morning, but it's too close to news. Yesterday it was V tops all the way down. It was a beautiful day to trade yesterday. V top, liquidity grab trader caught that. V top. We had a zero turn candle. Beautiful zero turn right at the close. Drilled the market. Zero turn candle is my favorite trade in the room. We know what that can do. That's when you're looking for the S&P to run 10, 15, 20, 30 S&P points with zero turns. There's a nice V top right there also. That was a sweet spot trade into the close. I mean, it was just selling all day yesterday. Selling, V top, V top. Another zero turn candle. So we'll wait till news comes out. Right now we are in an uptrend. We're only looking for buy side only. So it's going to release right here with news. The final GDP just came in at 3.1%. Forecast is 2.8%. So it came in at 3.1%. We just got to release 3.1%. You can see here. Release 3.1 is the actual. It just came out 3.1%. The forecast is 2.8. The market, you can see, is not moving the S&P yet. It's digesting the news. So what we're going to do, we're looking for buy only, no sells. Our dual trend filter is suggesting we're going higher as of right now. So where traders get mixed up in these markets is they try to counter the overall trend of the market with all these different indicators. Like I always say, it doesn't matter what fibs you use. It doesn't matter what pivot levels you use, the MAC, moving averages, all these lagging indicators. It's irrelevant what the market's going to do, what the market's going to do. It's either going to, this only does two things. It trends up. I mean, it goes vertical, meaning up and down, or it's going to go sideways and chop. Not very hard to figure that out. So what we do is we look for a dual trend filter. Our outer zone here that's been back tested for 30 years on the S&P to reverse price. see it's reverse priced several times on V bottoms today. And then we got my inner dots, which are my proprietary Renko bar type I created. If it's green also, we're in a major uptrend. So we can tell yesterday we just sold the market all day yesterday after the Fed came out. It was red all day. In the afternoon, it was just shorts all day. Beautiful, just getting cranked to the downside. Now it's green, so you can't short. You only can look for buys. So we're going to do, it's now a couple of minutes after news. We can start stalking trades for a V bottom that comes up. You won't change gears in this market. You won't change gears in this market until we close below 59.79. This is my outer edge. So you won't see a trend change in the market until we get two close below 59.79. You see the exact number on the margin over here, 59.79. If we do close below 59.79, these inner dots here will turn red. If it turns red, that means the outer trend is now green. My inner trend is red. That's a chop market. That's when trend changes occur like this. So when they don't agree, well, my inner dots are the opposite color of my outer zone dots. That's a trend change. And then you look for green. Once it turns green, go right back to V bottom. Just V bottoms are just really nailing it to the upside today since 2 p.m. when you had a trend change. We had a trend change from here when it turned green. My inner dots, outer dots turned green. V bottom nailed it. V bottom nailed it. V bottom nailed it. V bottom, both nailed it. V bottom. Here's the last V bottom. You don't want to take this before news. So what we do is we're going to look for another V bottom currently right now. And we're looking for a V bottom until we trend change. It had to close two candles below 59.79. Once it closes below 59.79, that is a trend change. You're going to look for red. Once it closed red, like yesterday in the close, yesterday at the Fed, look at this. Here's was a green-red when they did not agree. My outer zone was green, inner zone, my dots turned red. That said, look for a change from buying to selling. And there's our shorts. There's our failure trades. Look for the first red V top, and it nailed it. Absolutely nailed it on the trend change. It's a big move down, 54 all the way down to 34.20 S&P point hit potential. So we'll do the same thing today. We won't change gears until we close below 78.75. If not, we're looking for a V bottom buy. And from the V bottom buys, what are we going to look for? Right after that, you can use a liquidity grab trader. We can use a liquidity grab trader to look for the first liquidity grab after a V bottom. So we're going to wait for a V bottom here. It's now 8:35, 5 minutes after news. You can start using this strategy now. And then you can use the V bottom to fire in the trade if it fires. Now, the only time we'll switch gears to go for shorts is if we close a couple candles below my line in the sand, which is 59.79. These inner dots will turn red against green. That means it's in a chop transition. Then we'll switch gears. But right now, we are looking to buy still. Looking to buy. We don't have a sell bias at all. We have a buy side bias until we break. Once we break below 79, a couple candles, those dots will turn red. We'll wait for red, look for the first V top. Now here's our market profile level, 79.5. We get back inside that. We should come all the way down to 46.25, go to coast. If we close back inside of 79.5, 80, which coincides with right here, my line in the sand of 79. So it's set up pretty good. On the downside, if it does trend change, it goes red. If we go red, you automatically know your target for the day. Your target's low value area. Anytime in the history of market profile, since 1985, if you get back inside of high value area, you close inside of this big red volume profile, your target's the opposite volume profile. We've seen trades over and over again when I go back inside of HVA, it comes all the way down. It's what's called my coast to coast. I named that as a coast to coast trade. Goes all the way down to 46.5. If we stay above HVA, this market is strong. It's in what's called an imbalanced market. The market's balanced when you're in between HVA and LVA. Right now we're imbalanced. Imbalanced, meaning the market is looking to push higher. Our dual trend filter is buy side only. So right now we got the push the market. We also got our long Renko bar type. We are pushing higher. Since yesterday at the close, they've been doing all stop hunts and getting all the counter trend traders washed out of the market. Wash, rinse, repeat. Look at the smart money. They're coming in. They're bringing the money. They're bringing the market back for counter trend traders to get short. And they closed it back green all the way up. So we are going up in the market currently. We're not looking for any shorts. V bottom just coming in right now. We're not looking for any shorts until we close below 79. 79. Okay. Right now the market's imbalanced. If we get back in 79, the market becomes back to balance. We're looking for a coast-to-coast trade, 79 all the way down to 46. So we got our trading plan. We know what to look for. We need a yellow trigger to fire here to get the market to show some momentum. The best time to look for triggers to fire, you want to see the candles fire within 3 candles of the hammer. If it fires a zero-turn candle, like it did yesterday, I was in here talking to Aaron yesterday. Right there's your best trade set you're going to get for a liquidity grab or a zero. If you see a zero turn come in, the market fell 20 S&P points after that came up. The zero turn candle, that's what the hammer turns yellow. That is your best setup. The liquidity grab came in right after, and it just got smoked to the downside. It was a beautiful trade on liquidity grab trader, or if you took the V top. What most traders are doing, they're entering on the V top, and they're taking liquidity grab trader right after the V top. They're taking both sides, both of the liquidity grab, and they're also taking the liquidity grab trader. You can do either or, depending how you want to do it.